Axel Bichara has been an entrepreneur, investor, and company builder his whole career. Axel is passionate about helping founders realize their vision with capital, but more importantly providing them with company-building expertise he has acquired from leading investments in more than 100 companies, more than 40 private and public boards of directors, and from the creation of billions of dollars of enterprise value. Axel works very closely with his investing partners because he believes that investing in company building is a team sport. You are only as good as the team you play on. Keep listening to learn more about his passion for building companies, his journey as an entrepreneur and venture capitalist, and his investment strategy in people and AI as a founder and general partner at Baukunst, an early-stage venture capital firm.
Welcome to Oceanside Perspective. I'm Helen Wang, the founder and CEO of this nonprofit educational platform. Summer is all about sunshine, beach vacation, family time, and getting lost in inspiring stories. Summer also offers a perfect moment for pause, reflect, and learn from the real life experiences. That's why we invited Axel Bichara to join us today and share his journey. Axel, thank you for being here with us. How has your summer been?
Very good. Thanks for inviting me.
We all have stories to tell, actually stories define us. And I would like to start today's conversation by asking you a few questions in terms of what are the sources of influence that shaped who you are today. Let's start with, is there any hero in your life that inspired you and why?
So looking back at my career, I don't actually have I don't have a hero. I've been more independent-minded, finding my own way, but not, oh, I want to be like person X or Y. If there is a hero, it's my partner Monica, who challenges me every day in ways other people don't, which is sometimes really good and sometimes really difficult. But that's more the day-to-day hero than looking back at a career.
Tell us a little more. Why would it, she challenge you and you actually appreciate that?
Oh, because she looks at things from a different perspective than me. I'm the squared engineer who analyzes things, what makes sense, what's logical here, and she comes at things from a totally different perspective. It can be a spiritual perspective. It can be questioning the motivation of other people. Why is this happening? And sometimes totally out of left field. And sometimes I roll my eyes. This makes no sense, but sometimes it does make sense, and I better listen. Yeah. So it's being open to different perspectives is a key, which in a very well-trained analytical mind sometimes, at least in my case, gets lost. So.
Yeah, that's beautiful because we all need someone like that in our life.
It makes you stronger. But you need to be open to it. It's especially the image some people have of entrepreneurs is, oh, the person who knows it all, etc. But the more you're open to that, the better you're likely to be as a person, as a leader, as an entrepreneur.
Mm-hmm. Could you tell us a little more about where you come from?
So I grew up in Berlin. I would say a very independent kid, and skipped school a lot. Kind of did my own thing, and then started to study mechanical engineering. Was very good, and decided to go to MIT. Went to MIT, and then out of there, very shortly after coming here, started my first company. And maybe one other aspect of growing up was a very multicultural environment. So obviously West Berlin, the wall was still standing, was kind of interesting. My dad grew up in Egypt. I went to a French high school, and so from even at that time, we grew up as sort of world citizens, not sort of Germans that fit in a box or something. And that was really good from day one. So that coupled with was, I would say, wanting to be fiercely independent, sort of led me to doing sort of all kinds of weird things, but has served me well.
So you mentioned about culture, and did you have a culture shock when you just come to the US?
Yes. Yeah, many aspects. I mean, it is culturally very different. And I'd never been to the US before until I moved here. Some negative ways, but also in wildly positive ways. So, I mean, within a few months, I knew I was going to stay.
What are those things that kept you here?
It was the environment at MIT where everything was so good, ambitious, positive, let's go for it, encouraging, which is a sharp contrast to German culture where everything is sort of more, everybody should be more or less equal, and if you stand out, you're more likely to be pulled back. Where here, if you stand out, keep standing out, and MIT may be the ultimate incarnation of that environment, and it was just totally great to be in that world. And I just knew, okay, this is where I belong.
Mm-hmm. So after all this year, in that perspective, cross culture, did the German culture where you come from helped you?
Oh, totally. Yes, totally helps. And so even sort of starting with engineering education, the basics of German engineering education is very good. So the average engineer in Germany is 100% much better than the average engineer in the US. But the best of the best are better here. So a broad and very systematic education is certainly good. Obviously, the culture of growing up in Europe and even geopolitically thinking about what that looked like in the whatever 70s and 80s, very different from the protected world in the US. Yeah, it totally shaped me and my experience.
Almost every one of us encounter those cross-cultural, multicultural experience, and culture has been part of us growing up as well. And would you say like, you find a good balance between utilizing the best part of each culture and formed who you are?
I think so. I hope so. I pick the best and enjoy it, maybe consciously, maybe unconsciously, but yeah, totally.
What is your superpower when it comes to German culture that you still practice, I can utilize every day?
Maybe it's good old-fashioned hard work, right? I enjoy work. I work hard and go for it, and that's the one that comes to mind.
I think you co-founded a company, your first company, when you was 23 years old. Tell us more about that.
So I came to MIT. It was in the summer in August. Courses started in September, and then in the second semester, I always thought, oh, one day I'll start a company. So I went to a business school. So at the time in the engineering school, there were no classes on business planning. So I went to the business school and just went to a class on how to start a company, and ran into somebody who was actually in my lab, and that's what led to this company coming together. I didn't have an idea. He had an idea, but we got together and started it. And we raised our first round of venture money from very well-known investors. And this all happened when I was 23 and within less than a year of coming here. So we ended up being a funded startup. And I still wasn't finished at MIT, and I still wasn't finished in Berlin. So it was a very challenging with a degree. So I had to finish these degrees on the side. It wasn't a big deal, but it was work.
Will you wear more like a CEO hat, or you are more like the CTO?
I was VP engineering, but I'm not the, in the context of that software company, I was not the leader visionary. I was more the execution, get stuff done person.
So what happened after that? Like you founded the company and you got the investors interested, and what happened after that?
It was a very wild, intoxicating ride, actually, because we didn't know that much, right? 23. So founders today, when we back somebody who's 22, 23, 24, I feel kids today know much more than we did back then. We kind of had this vision. Yeah, this should be done. Let's just do it. And we had people who trusted us with real money and went for it. Formative in a way, right? Because you had to do everything yourself. Nobody told you how to do anything. It was also the total dark days of software development, and the how we ever got this software done is actually a miracle if I think about it today. But a lot of it was just crazy hard work of staying basically until midnight, many evenings, and just programming away to get a product done at the time. But it was totally great. Extremely smart people, a vision, and you're young. You just go for it. So.
So now you reflect back. What do you think are the top reasons why did the investor picked you and your founder?
I have definitely asked myself if I would fund us, if I was an investor today, and maybe not. I don't know, but I think they got it right that we had a pretty exceptional team, and there was maybe more evidence by what we did after that first startup, which was we sold it, but it wasn't a real success. But they definitely figured out that we were a bunch of pretty good people, and we went on to doing pretty good things after. And that's the essence of the venture business, actually. So they got it right, but the market opportunity we went after just wasn't attractive enough, and that's why it wasn't a real success.
So what was the exit strategy for that company?
We ended up selling it. It was acquired by it was a mechanical CAD company, and it was acquired by at the time the biggest CAD company out there, but for a small amount of money.
Did you end up working for that company?
I had to, because there was an earnout for a year for the investors, not for us. So the investors made more money if we stayed for a year. So I stayed for a year, was really kind of mentally moving on already. But basically, I counted all the vacation days. So the day I could give notice, I left. I didn't stay one day longer than I wanted. Then I needed to for the investors to make their money, because a big company isn't my kind of environment. And there are brilliant people in the company, and I could have taken more advantage of it, but I just don't fit well in a big structure where I'm told what to do.
23 years old, I cannot imagine. I know a lot of entrepreneurs pitched so many times, never got funded, or it's so difficult to get funded, but that was your first time. So how did that shape you the rest of your life?
Truly crazy experience. It was just, yeah, I have really great memories of it, and so many stories. You could fill a whole evening of how we brought people in, how we were going to pay ourselves, how we developed product, etc. It was just totally wild, and for people who know the environment of that time, it's actually great to talk about it. There's some great stories to tell. Also, how brutally hard it is to get a product done. You never lose it, right? So when we make an investment today and somebody develops a piece of software, hey, I developed that software, and it's very unlikely that anything you do today is as hard as what we did at the time. And also the working with very good people. We had some very good investors, interesting board members. We had an external CEO brought in who didn't work out, so that was an interesting, not good experience. So many little things, and it was only 4 years from funding until we sold it. And it was really a formative experience in so many little things. Even some of the people we hired, how on earth could we have hired that person at the time? I can still kick myself today for some of the decisions we made back then. It's ancient history.
What would you say the highlight of that experience, if you have a story to tell us, that moment?
The highlight was just doing it, right? We did it. It was a crazy thing to do. We did it, developed a great product, and also went through the disappointment of it not selling the company, eventually landing the plane. And it's really the whole thing with all the nuances. We did it from day one to the last day and got it done.
So after that entrepreneurial experience, what happened?
It was either start another company or become an investor. And what I did first is, and then the other question I had, do I move back to Europe, at least consider it, or stay in the US? And there's this business school in France, INSEAD, which has a 10 months program. So I actually did an MBA at INSEAD for 10 months in France. And then was a decision, okay, start another company or do VC, and then do it in the US or in Europe. So a bunch of permutations. And I decided to go back to what I really wanted to do, which is VC in the US. And so it was a very, very conscious decision. This is what I want to do. And I'd learned about it as a founder from some very interesting people. Said, okay, that's for me. Let's try it.
So how old were you that time when you started as a VC?
Well, 20, maybe 29 or 30.
So after all these years, how would you describe your investment philosophy? Have you changed, for example, from early years till now?
Yeah. Yes, I keep changing and I keep getting better. That's one of the interesting things in this business. You always make more mistakes, you learn more, and then hopefully get better from that. But the essence of our business is the people we back. I mean, it's so simple, but it's also true. So when this firm I joined, Atlas Venture, when I started in the venture business, was new in the US, and I wasn't one of the founders, but I helped build it in the US. At the time, you would make an investment, it's sort of driven by technology, and the management team doesn't feel quite right. Oh, let's do a CEO search, let's find somebody else to run it. I'm not doing CEO searches anymore, right? We back founders and work with them all the way to an exit. So that's just as an example of something I learned. Back founders and find people who are good enough, who have a chance to scale to a really big company. Most important thing of the investment philosophy is founders, founding team. We prefer founding teams to single founders, and but regularly also back single founders, and then it becomes even more important to surround them with a good management team. And then the second key point is it needs to be a big market opportunity. If it's not a large market opportunity, it's just not worth doing. And that's actually still shaped by my first startup, which was just too small a market. It was a great product, but we called it by MIT engineers for MIT engineers, and there's just not enough of them. So you need something for all engineers if you want to build a real product, a product with big upside. So we looked for great founders and a great market opportunity, and the strategy of how you pursue it needs to make some sense, but the details of that are actually less important. And that's it. That's the essence of how we invest at Baukunst and how I invest as a person.
So people, let's talk about that. I don't know how many ideas do you have entertained, on a monthly or yearly basis, and you see a lot of people, a lot of entrepreneurs trying to pitch right to your company for investment opportunity. How do you know that's the right team of people or right single founder?
One key thing to realize is that you don't know. You make a bet, and it's about a betting average in the end. And many times you will be wrong. But if you want to be really safe, not make mistakes, etc., you will fail. You need to be really smart, analytical, but also experienced. Experience helps a lot in making these judgments. And then you need to be okay that you get it wrong regularly, because there's no objective answer about whether or not a founding team is really good or not good. And so we, of course, have criteria, right? What have they done in their lives before? So I'm a believer in looking at people's resumes. Have they done interesting things in their lives? The whole immigration, somebody who has gone through moving to another country, learning other languages, dealing with other cultures, that's a huge advantage because they needed to kind of somehow make it through versus not. And somebody who's won an Olympic medal, since we just had the Olympics. Well, yeah, if you're crazy enough to get a medal, there's something good. Somebody who won a mathematics competition, or traveled the world in a crazy, interesting way. So we look for outliers, basically, in terms of the individuals, and but outliers who've actually accomplished something. You can have fragmented resumes. Somebody has done 10 semi-interesting things, but they've never really accomplished anything. Well, that's not so. That becomes a little less interesting. And then we get to know founding teams as we spend time with them, and we try to, I call it, we get into their heads. How do they think? What's their motivation? Are they authentic? One of my favorite activities is, let's look at an operating plan for the next 12 months. And so how are you going to run the company in the next 12 months? Who do you hire? When do you land your first customer? When you get the product done? And that's a great way to get to know how somebody thinks. And it's not about the plan, it's about the conversation about the plan. You look at the dynamics between founders, if there's several of them. Of course, we do reference checks of the references that don't come from the founders themselves. And but sometimes you have to do it very quickly. And sometimes it falls into place easily, everything checks out. And sometimes it's like pushing a rope. You don't get a reference, somebody, it's not right, etc. And then you're often better off to pull back. But what makes it even more difficult is that the people who are sort of the nicest people, sometimes the people who have a little bit of a controversial reference and break some glass are more successful than the super nice people, right? So it doesn't mean, oh, we don't find nice people, but it's all sort of degrees of craziness, of being nice, of accomplishment, but the business is a business of outliers. To create a company that's worth $1 billion is not normal. It's an outlier, and so you've got to look for the outliers, but it needs to all make sense in terms of quality of people. How do they hire? Who do they surround themselves with, etc. So I'm rambling here, but it's very tricky, and you need to be tuned into it. And I think it's one of the key success factors, actually, to get this right a little more often than not.
Mm-hmm. So I wanted to ask a few follow-up questions. As an outsider, I'm always curious about, for example, how important is the first impression?
It's important. It totally is. Yeah, I mean, you'd rather have somebody who's on time, semi-polished story, has a good resume, etc., high energy. But sometimes a nervous nerd turns out to be, needs to warm up a little bit, and maybe I was a nervous nerd as well in my past life. And sometimes a really polished thing, you scratch the surface and there's nothing underneath. So clearly, no second chance to make a good first impression, but what counts is the substance.
How important is the storytelling in that context?
I would again say it helps to package a story, but we will get to the bottom of it, whether it's packaged in a good story or not. So clearly good to have good storytelling skills, but a good story doesn't turn a bad idea into a good one.
To wrap up this investment philosophy, when you look at the entrepreneur, when you decide what to invest and how you invest?
It's different for every deal, actually, because every situation is different. But it is sometimes you really worry about the team and team dynamics, or there's a weakness on the team. Sometimes team is great as a market good, or there may be overwhelming competition, or maybe great team, great market, but the operating plan is spending way too much money. No two companies are the same. And it's actually, there's this analogy to kids, right? If you're a parent, no two kids are the same. They all are great. They all have different needs. They have different ways to eventually make it and be successful. But you need to be flexible and present and supportive as an investor. But it's not a cookie cutter approach.
Mm-hmm. Were you more looking for the strengths of that proposal or that idea, or or you're more try to poking the weakness?
We write a document that is extremely short, and which I realized many years ago is really the essence of how you make decisions. It is key reasons to invest and key risks, and then next steps. So if it doesn't fit on a page, it's too long. So you start with, why do you want to invest in? There better be really good reason: exceptional person, huge market, great technology, great customers, whatever. And that's what it's about, right? It's about the positive and the upside, and why are you doing this? And then the key risks are, everything has risks. You just need to understand what they are. But the real reason for doing a deal is not the downside. It's about the upside. Can it be big enough? Can this founder scale the market big enough? Can you just be out? Is there a chance to be outrageously successful in 10 years? That's what it's all about. And so I think as a good investor, you focus more on the upside than worrying about the downside.
I'm curious because Oceanside Perspective, the nonprofit I founded, we have this 4 core value, L.I.T.E. So leadership, innovation, technology, and entrepreneurship. And we emphasize L.I.T.E. across generation, want to learn, intergeneration, multi-generational learning. So how would you say the L.I.T.E. have any influence that in your investment decision?
I mean, they're all super important, right? It's, you need to be an entrepreneur, a leader needs to be innovative. I mean, they're just fundamental. All 4 are fundamental pieces of the companies we fund. Yeah, I wouldn't rank them or anything. There needs to be a critical mass in each category for a company we fund to make sense.
How many companies have you invested?
I actually don't know the answer, but it's certainly more than 100.
Yeah. So what is your success rate in terms of investment?
To answer that question, the first thing is, how do you define success? And as very early stage investor, the definition of success is different from a later stage investor, right? So we have the ambition when we make an investment that we can return the whole fund from that investment. So we're a $100 million fund. So from the investment I made, if I can return $100 million to our investors, that's a successful investment. Happens very rarely, right? You need 1 per fund to have a good fund, generally speaking. But it's actually a very important part of the investment strategy, because if you don't think big, you will never have a great fund. You need a few of the outlier successes just mathematically if you want to make a very good return. So you make 2, 3, 5, 10 times your money. Is that a success or not? Some people would say it is a success in the context of, I need to turn $1 million or 2 into 100 million. It's not, but we actually don't worry about the failure rates. We worry that the successes have a chance to be big, because even if you have a 90% failure rate, it's okay if you're 10% outrageously successful. In practice, we make money on at least half the investments, but in super early stage investing, if you invest $1 million, you get $1.5 million back, or 2. That's not a good outcome.
So you have a good sample size, like 100 company. There's like industry statistics out there say, well, less than 10% actually survive or success, whatever, like moving on to some meaningful impact, right? What's your own sort of assessment, in terms of your portfolio of 100+ company?
Interestingly, I've never done the analysis. But I have definitely learned from mistakes. So the mistakes you make where you just, especially if it's partly my fault, we just screw it up, whether it's a bad decision or bad what we call deal management, work with a company. Or the worst mistakes I've made is throwing good money after bad. A not so good company, you keep trying, you keep putting more money in. That's where I've lost the most money, and they're just sort of sickening stories, actually, if you think about them. Such a complicated business that it's the positive is you never stop learning, and you can always get better. And the mistakes stay with you. You don't forget the mistakes.
Give us an example of a mistake.
Well, the biggest mistake is throwing good money after bad. where you are, let's say, the initial lead investor. You believe in the founder, you believe in the market opportunity, and now the company is running out of money. They need more money from you, or a bridge financing. And well, I believe in them. I did my due diligence. This should really work. I put more money. And then next thing you know, and then some new investor comes in, leads the next round. Well, you have to do your pro rata. You invest more money. And it's very, very difficult to be intellectually honest on your own deals, actually. And falling into the trap of, oh, somebody else funds my deal. Great, at a step up higher price, therefore it must be good. I'm putting more money in. And not having the discipline to question whether or not that's a good idea is very, very difficult. And that's certainly something I've struggled with. There's also the relationship with the founders. If you have a large fund and you don't follow on rounds, there's a signaling risk, right? And so we always advise our founders, don't raise a small round from a large fund, because if they don't invest further, you're dead in the water. Because everybody knows it's a large fund. If they don't invest further, there's something wrong with the company. So that has very specifically informed our strategy, where we invest in where we're the lead investor in the first round. We may write small checks and follow-on rounds, but we're not carrying the company all the way, and that totally helps with a potential signaling risk if the company isn't doing perfectly well, which most of them are not. Most of the perfect hockey stick doesn't exist. It's a bouncy ride for just about everybody.
Yeah, you're talking about having the right people, the right market, the right timing. It is difficult, right idea, right technology. I mean, like everything. That's why they are the outlier. Do you have an outlier story, like an example that either super successful or you just made a missed call, somewhere in between, therefore they failed. So we love those stories, like extremely happy story, as well as some big mistakes.
I'll tell you a story of one of my favorite companies right now. The company is called Wild Grain. They make a subscription for good bread and pasta and pastries. Coming from Germany, by the way, good bread was part of the personal journey story. We funded the founders in their first company, lost all our money, was not successful. And they came up with this idea, which was definitely a different idea at the time. And we did it. We became their lead investor, and they turned and made a relatively small investment. And they turned cash flow positive and profitable on that investment, and have become a real success. And we've become good friends on the way as well. So that's sort of a wonderful work in progress. It's not done until it's done. Maybe I'm jinxing it by talking about it, but has a good chance to make a lot of money, but has certainly been a wonderful journey. And the story of you lost all your money backing a team, and then you back it again, and then it works. That's a good story.
Mm-hmm. Yeah. What about mistake?
I won't name a company, but the mistakes are around people disappointing us, right? Somebody who has all the characteristics and maybe gets a market opportunity right, and has maybe the smarts, maybe has an MIT degree or something like that. So you think they have the smarts, but then for reasons of ego or greed or just poor execution, poor hiring, somehow screw it up. These are the ones that hurt the most, and it happens. It does happen regularly, where you think, I really thought this was a great person, did all the work to check that person out, and then you're seeing, I can't believe they're doing that. So these are the biggest ones, because Google starts to compete with you and you get killed. Well, that's part of life. It's almost less personal. But if the first company I started, the market just wasn't there, market just wasn't big enough. Okay, maybe you should have seen it, and it hurts. But the personal disappointment is probably the most difficult one. To add one more to that, because it is part of our life. Sometimes people fail or disappoint us, and they don't even say I'm sorry, right? Right? They took our money. We worked on it for years, and we tried hard. We made mistakes too, but even sort of closing it out, sometimes people don't do, which is if that's the case, well, that is not a person we're going to back again, like the other companies we just talked, like the other company we did back again, the other founders.
Yeah. You know, in this very complicated business, how much is luck? How much is really, you know, the reality?
Luck plays a huge role. I'm a huge believer in luck.
Yeah.
And there's this luck comes to the prepared mind. You need to be ready for your luck. I think you can increase your chance of being lucky. And by being open-minded, listening well, taking risks, going for it. But luck is a huge factor. And sometimes somebody who starts their first company and is highly successful is actually somebody we don't necessarily want to find again, because chances are there was a good piece of luck, but often people think it was all them and become arrogant, don't listen well, I know it all. And so the originally unlucky founder who does it again is actually a very interesting profile. That's a positive for us.
I'm looking at your bio. You actually mentioned 3 things to describe yourself: entrepreneur, investor, and a company builder, right?
Yeah.
And so we talk a little bit about your entrepreneurial experience when you were 23. We talked about your investment, you know, all those years, 100+ company. And I'm curious about your view for company builder. Like, what is the strategy do you use to help company build their expertise, and why is that important?
Yeah. Okay. All right. So the name of our firm, Baukunst, means the art of building, and describes or tries to communicate that we practice the art of building companies, and we do it in a very opinionated way, and we're trying to bring best practices, really the best practices we've learned to our companies to help them build the foundation for something great. If you think about building the foundation for a house or potential skyscraper, there's so many things you need to get right in that foundation so the thing doesn't fall over eventually. But our job is to get the most important things right. Get the team right, strategy, business model, customer focus, but also recognize issues that are going sideways before they happen. We call it looking around corners. If you've done this for a long time, you've made so many mistakes. Well, you're supposed to know what could be behind that next corner, anticipate it, and help prevent it or mitigate it. But I'm going to go back to the analogy with children. Every teenager, let's say, needs something different from their parents. So there's no no cookie cutter, no one recipe. It's more, okay, here's the situation of the company now, and being present and thinking, trying to think a few chess moves ahead. How do I help steer this in the right direction in a strategic way? And many investors say, oh, I'm adding all this value. I can introduce customers and potential hirers. I'm well connected, blah, blah, blah. Anybody can do that. But the difficult topics of maybe your co-founder is not good enough, or maybe the equity split is unfair. These are some of the most difficult ones. Maybe you actually are in the wrong business. And maybe you still have plenty of money in the bank. Maybe you need to actually cut your burn because this isn't going as well as it should. Or maybe that's not the right customer to go for. All topics that are probably unpopular when you bring them up. And what do you mean? Often you get a what do you mean reaction. But helping get a few decisions like this better can have a meaningful impact on getting the company, and can actually save it. Can make the difference between success and failure. And we pride ourselves for being present, tuned into the companies, tuned into the markets that they operate in, and having a deep understanding so that we can anticipate these issues and bring up difficult topics proactively.
How did you describe the relationship between like your company as an investor with the company you invested?
We are backing the founders, right? We stand behind them no matter what, right? We do whatever we can to make them successful. But we do it in an intellectually honest way by asking the tough questions, etc. We are not cheerleaders. It's very important. Many investors are loved by founders because they support everything's so great, blah, blah, blah. Anybody can be a cheerleader, right? I want to be the tough love parent who brings up the difficult topics. But the rule is you bring up the difficult topics, but then you get out of the way. Because the founders need to own the decisions, need to run the company, etc. So our job is to speak up, and there may be disagreement, but then they make a decision, and then we do whatever we can to help them be right and support that decision, and never say I told you so or anything like that.
I love this analogy about like tough parents. You love your kid, but each one of them is so different. How would you give that feedback? Is that more happening at the, let's say, a one-on-one conversation, a small talk, or happening at a board level, when you gain a board seat?
Every kid needs something different, right? Sometimes you sit in the board meeting and you do it in a formal way. Sometimes you just need to go for a drink and talk about something like that. And sometimes, and it's actually about a week ago, one of my partners and I had one of these very difficult conversations with one of the companies. It was highly uncomfortable for everybody, but it needed to be done. And we said, it's like, ugh, this was terrible, but it needed to be done. And then we did our job. We spoke up, but now we said, okay, we need to get out of the way for a few weeks and kind of see what comes back. So every company, just like every person, has different needs, and the dynamics are different every time. Clearly, it's better to do it in person than by video. This one happened to be by video, and often it's best one-on-one instead of two-on-one, and because you want to leave space and sort of an escape route almost if you're the investor and bring up a difficult topic. And it's also very important to communicate that we do our best in bringing up topics, but we may be wrong. We also realize there may be this difficult thing, but we may be wrong. So we put our perspective out there, then say, well, we will back your decision, and we realize we may be wrong, and maybe we hope we're wrong, but this is our best guess right now. And that's where everything in this business, as an investor, much more than an operating role, because we're not really in charge, right? Is this batting average, right? You want to get it right more often than wrong, but you can't agonize forever if you got it wrong. Just, okay, I got it wrong, move on.
Have you worked with like entrepreneurs from different generations?
Yes, definitely.
Mm-hmm. Do you find like distinctive differences or commonality? Or I'm just curious about different generation of entrepreneur. Do they carry like their own personality? I saw, I think a book today talk about generation itself has personality too. I'm still digesting this idea, but it's an interesting idea.
The truth is, I've never thought about it that way, right? We've backed people super early in their careers, early 20s, all the way to later in their careers. Actually, no, different people have different biases. Some people just say, well, I want first time, fresh out of school. Some people say, well, somebody mid-career is ideal. We're actually kind of agnostic. We're kind of age agnostic. And every person, every situation is so different.
Your MIT story, you and your co-founder all came from the same school. I assume it's the same generation group, right?
Yes.
Like your classmate or someone you met at MIT.
Right.
So as an investor, do you see more like people coming from the same background, same generation group form as founder, co-founder? Or do you, for example, in contrast, would you prefer more of a diverse, right, generation because they
Yeah.
bring the best of each, experience,
Yes.
education, technology, everything?
So most companies are more homogeneous, at least in terms of age. But I'm a huge believer in diversity. And I think certainly it does include age. But people to, oh, gender diversity, just so many different levels of diversity, right? Cultural backgrounds, educational backgrounds, age, what you've done before. So more diversity is better. It's just so simple. I mean, it's totally part of our job to recognize, hey, this is this groupthink at times is much more likely if everybody has a similar backgrounds, etc.
Given that your engineering background, are you biased, if any, that we all biased to a certain extent, are you biased, if any, that when you look into like the company you wanted to invest, would you more leaning towards to like technical background founder?
Yeah, I think I'm biased. Yes. I
For
think
good
it's fair to
reason, I
say.
hope.
For good, yeah. I mean, it's a little bit the pattern matching. Most tech companies are driven by people with technical backgrounds. I mean, again, I've never done the statistic or anything, but chances are I've had the most success with people with technical backgrounds. It's something I can relate to, obviously, because I went on that journey. But I would also say diversity on teams. If you have three people with the same degree, same engineering degree from MIT. I mean, that can't be a good thing, right? You've got to add diversity later. But if I have the choice between three engineers or three sales guys starting a company, I take the three engineers.
So can you tell us a little about your current company, the current VC, Baukunst?
We started it a couple of years ago. And what's interesting here is you said I was an entrepreneur and then I became an investor. If you start a venture firm, you're actually also an entrepreneur because it's the same thing. You need to raise money, you have investors, you need to have a team, you need to have a strategy. So you get to do both. You invest and build a company. I'm doing it because I love this business. I love building companies. I love investing in companies, and I love the team I work with. So we got to know each other over the last roughly 10 years. Worked together at my previous venture firm, Bolt, and kind of came together through some winding paths and said, okay, let's do this new firm together. And I'm a big believer that you're only as good as a team you play on. And I always preach that to companies we invest in or to people when I give career advice. But it's certainly I practice it as much as I can with the team that I'm working with. So I'm a huge believer that a team makes you stronger in a venture firm because it's such a difficult business. All the things we talked about, it's so difficult. If you have a good team, you have a much higher chance of success. But it needs to be a functioning team. And I think it's fair to say from decades of experience, the vast majority of venture firms are not really functioning partnerships. And I've seen venture firms go sideways from functioning partnerships to basically everybody competes with each other. It's political, etc. It's totally wonderful if you have a functioning partnership, and we have that, and we grew together as a team. And I would be a much worse investor and less happy person if I didn't have that. And that's just super motivating, and it's really our secret sauce. So it's the four of us. I think you know all of us.
What's the pattern or maybe a formula to have a good team? Are you looking for more like complementary, skill sets, a personality match? Like what exactly make a great team?
I think you mentioned luck earlier. It's a little bit of luck, right? We ended up a weird set of circumstances led to the four of us being together in our careers. And then, of course, there were others that we worked with that didn't end up as part of this team. But this just kind of fell into place. This allows me to speak about one of my favorite analogies in team building, right? when you draw an org chart, you have these, they look like bricks. Every person looks like a brick. There's a brick here, a brick there, Joe, etc. But people are not bricks. People are weirdly shaped stones, right? So the way you build teams is you have one weirdly shaped stone, the next weirdly shaped stone, and then the next one that somehow needs to fit in there. And we are just four weirdly shaped stones that somehow fell to working. And it's a huge privilege to be in that situation. And we're just taking advantage of it every day. And one of the benefits I have, because I've been around for a long time and have seen so many situations go sideways, I am probably the most sensitized person to that culture and good teamwork staying there, because when it goes away, it's just terrible. And but so it's just working in a beautiful way right now.
When you're thinking about a leader and when you're thinking about entrepreneur, do you see any common traits in between?
I mean, you kind of have to be a leader to be an entrepreneur, because you need to get other people to follow you, you need to get investors to follow you. But a leader is sometimes the rah-rah, loud, extroverted person. You can be a leader by being quiet and introverted and just doing the right thing every day. So yeah, but you need to, I don't think entrepreneurship without leadership works.
What about the other way around? Like, do you think the entrepreneurial spirit or quality is required by a good leader?
I don't think so. And necessarily, because if I think about the little exposure I've had in large companies or from people I know, right? You can be a successful rah-rah leader in an operating role, in a large company, and be totally non-entrepreneurial. So yeah, no, I think it's actually different.
So what takes to be a good entrepreneur?
Authenticity is the most important thing. Why are you doing it? What's your motivation? The why is probably the most important thing. And then how, of course, matters too, right? Quality of people you surround yourself with, which is not just its employees, but it includes investors, advisors, even customers. So there's a how, but the underlying why is maybe the key.
Then follow-up question, what takes to be a good venture capitalist?
I mean, it's the same thing, right? What motivates you? And I'm a nerd for building companies. It's just like the way people like to work on their car or bicycle. I like to work on getting companies right. And well, this is me, and there are many different ways to do it, I think. But being authentic, being motivated to do it for the right reasons is okay. I'm going to digress for a minute here. There are people I know who joined the venture business, and so they're younger than me and are now retired. So in and out, did a few funds, make a fair amount of money. And with some of them, I have this thing, oh, this was just a way to make money. And it's kind of a disappointment because it's a very difficult business. If you're just in and out to make money, there's something wrong. I feel there needs to be this, at least what I subscribe to, this desire to build these companies that I feel myself and that I've observed in others. And I'm disappointed if I don't see it in others. Now, maybe the others were better investors than me. I don't know, but this motivation is something I totally believe in. So other characteristics, obviously, I think working well in a team, because I think you're better off with teammates than alone. Intellectual honesty is super important. You need to be vulnerable, being able to listen, extremely important. Keeping your ego in check. If you look at the kinds of people who become VC, there's clear correlation with big egos. Yet ego is the worst thing you can have in VC, but it attracts these personality types. So it's kind of a problem. But the number of bad decisions, if I reflect back on my career, that were driven by ego. Oh, my deal is better than yours, I'm going to put more money in. Or they're just decisions driven by, motivated by the wrong reasons. There's just a lot of that going on in VC. So listening, intellectual honesty, hard work, by the way, matters too. Do the work, do the reference checks, understand the market, talk to the customer, actually is important. But you can't do all that work unless you're motivated to do it. And because it's too hard if you're not. If you just do it to make money, but you need to want to know what's going on. Otherwise, you won't do it. You won't do it well.
Investment by nature is something future, not yet happened. As
Right.
you begin this conversation using a word bet, right? You're betting the future, basically. And so I'm wondering about how much you would rely on like data, like market analysis and things like that, financial analysis. How much you actually rely on like opinion? Opinion is more about based on like experience, based on reference, based on someone. I view actually both venture capitalists as well as entrepreneur both have very strong opinion, because if you're not bold enough, ambitious enough, you're not going to be in that category. So how do you strike your balance, from years of your experience?
I think it's very important to be honest with data, the intellectual honesty, because sometimes we sit in a meeting and say, oh, I think this is a big market or this great opportunity. And we say, okay, how big is the market? Who are the leaders? And sometimes, oh, it's this, whatever, $5 billion market. Okay, who are the leaders? Here are the three companies. What are their combined revenues? 100 million. If the three leaders are 100 million, it's not a $5 billion market. So actual data is very healthy, especially because we need to make decisions pretty quickly and with a lot of uncertainty. So objective data to kind of give you at least a few fixed points that are objectively correct is actually extremely helpful. Now, often the companies we invest in is potential markets, right? What does this market look like 5 or 10 years from now? And you can create any spreadsheet to come up with any number. But even even then, doing one of my favorites is related to maternity, kids, etc. Well, there are 4 million kids born in the US. That's kind of a fixed number. It's not going to be 8 million a few years from now. So there's an actual data point for market sizes that's actually very helpful in conversations. And I think the longer you are in the business, the more you get to have opinions. But I would say the earlier in your career, the more it needs to be data. And anytime you can have data is better. And early in my career, there was no internet. There was internet, no World Wide Web. It was much harder to find information. It's a huge luxury to have the level of information at our fingertips in our jobs now.
So that's great, because you mentioned about the market, how big the market. We do have a thing going on right now, right? Like when you're talking about AI, I think the vision and how big the market is almost, priceless and endless, right? In terms of how you describe that. So I'm curious about your perspective about AI. What will be the impact, for the future? Are you working on anything sort of investment related AI strategy?
I mean, most of our companies have an AI component. It's an integral part of life already, and it's also nothing new. But I would say what happened in the last few years is a discontinuity in terms of usefulness, right? The sort of critical mass of usefulness that wasn't there before. And the way I view it is it will have it has an impact already, the way past platform shifts did, right? Pre-internet to internet, mobile, obviously. AI is going to be that kind of it's a piece of software that will be part of all of our lives and almost everything we do, and will create massive new opportunities, augment existing opportunities, etc. And it will just be part of everything, just like your mobile phone or your computer or the internet is part of everything.
Yeah, but isn't that bring the challenge? Like if someone pitched to you regarding an AI related opportunity, the market seems big because everywhere needs AI, moving forward. How would you differentiate? Like how do you gauge if this is a real opportunity or this is something different?
So yeah, so we're doing at Baukunst these study groups where we study a topic and then engage really good people in a conversation and actually publish a document. And we just did a study group on CAD and AI, CAD engineering software space I know really well. And it was really some of the world experts in CAD talking about what can be done, what's realistic, etc. Saying, oh, AI, there are many companies out there, oh, I just do AI for CAD and will revolutionize everything and all the existing companies will be dead. It's just fantasy. It's not going to happen. And you just need to be smart about it. There are very specific opportunities, many of them very niche, that are actually getting funded that we are not funding because we think the maximum outcome is a $50-100 million acquisition, to the earlier part of the conversation, not what we're looking for. And many of these are sort of AI features in existing, that are really features of existing systems that will exist and should exist, but not enough to build a big company. And so what we tried to find are the more either new opportunities enabled by AI or really opportunities where you can disrupt or maybe more likely augment existing software with AI. But it's super difficult to actually find something that's big enough. And plenty of things are getting funded that, in my opinion, are not big enough. That has always been the case. I mean, remember, there were funds doing, obviously, there were mobile funds. There were, when the Apple App Store came out, I think somebody came up, oh, we're doing an App Store fund. I mean, there's a fund for everything. We are experienced generalist investors, and yeah, AI is great, but it needs to make sense. It needs to be a real plausible business opportunity. That having been said, there are definitely opportunities where really nothing existed before. It's really more a wide space where it's work a person did that can now be done by a computer, where it does make sense to go in and where you can hopefully build a big company quickly.
Do you think a VC is a good career choice? I mean, I do actually have, students of mine looking to VC as like a career. I mean, would you recommend that?
I mean, it's for the right person, it's the best career imaginable, right? Because you get to work on all these companies, and you can build your own company too, venture firm. It's a business with crazy long time constants to success. So you can work for 10 years and not make any real money, and not knowing whether or not you're good, because it takes so long to learn about the business, to then be lead investments, to then see results of those investments. And so you need to be very patient. And it's very complicated. So I would say for the vast majority of people, it's not a good choice, but for the right people, it's the best thing imaginable.
I'm going to use an analogy. I think we're thinking alike, in a way, because you used a similar analogy before: building a house, building a company, a brick, stone and things like that. So if you think our life as a house, can you knock down the wall between the rooms and be the same person in each one? Why and why not?
I'm the same person in each room. I mean, I think about business all the time, right? No matter if I'm on vacation in some winery, I'm asking, so how many hectares? What's it? Same thing. And the analogies of personal relationships and the relationships with founders, or the relationships with my partners, I mean, it's all the same thing. I don't think, I mean, that's it for me.
So life is like a book. We started with like a summer, being lost in an inspiring story. Thank you so much for sharing your story today. If you would pick a title for your book that describe your life, what would that be?
Doing is better than not doing.
Wow, I appreciate that. Yeah, that's powerful.
I have to say, it came a little bit from my mom, right? It was always, if in doubt, do it.
Yeah, as an entrepreneur, right, I think part of the spirit is learning by doing, right? You have to start doing something in order to learn and make things happen.
So many people are afraid. Just do it. And
a lot of people are afraid.
Yeah, life is full of risks. So
yeah. Well, so as we discussed, life is like a book, and you are the author. It takes courage and honesty to reflect on high-stake mistakes and failures. Axel, thank you for opening your heart and sharing your story with us today.
Oh,
Your insight and experiences offer invaluable lessons, and we're very grateful for the opportunity to learn from you. And we wish you continued success in your investment, both in new ventures and in people.
Well, Helen, thank you for the warm way in which you've done this interview and everything. It's really cool, really cool. Thank you for doing it. I hope you got out of it what you wanted, and
Yeah,
it's been
definitely.
a huge pleasure.
Yeah, thank you so much. And as we close, I wanted to remind our audience of Oceanside Perspectives' mission is to ignite diverse perspective from authentic voices across generations. May this episode inspire you to reflect, think ahead, and embrace learnings with curiosity. Thank you for joining us, and until the next time, take care. Thank you again, Axel.
Thank you.
Thanks for listening to Oceanside Chat. We hope you enjoyed this conversation. If you liked it, please share our podcast and stay tuned for more episodes. We'll see you later.